Okay, hi there, traders. Now, and especially Kyle, one of the good things to do, especially if you see a good trade set up, you put the trade on and you get stopped out, is to really come back and try and confirm whether your setup was correct, whether the market's just discombobulated, etc. Like it's good for building confidence and can really improve your overall performance. So, what I'm doing is I'm just looking at if I just come back over here, just looking at Kyle's question here regarding his sterling Swiss trade. Right now, first of all, sterling Swiss, I would put in the basket of exotic cross, right? It's not the exact science like the major crosses like sterling or like the yen crosses and these sorts of things. It can be a bit looser, but there's a question mark over here around, was the entry level wrong or, what could be done better? Okay, so let me just run through the setup here and you can actually sort of usually find out the answers to this. So now I've just drawn the trend line, which I believe, which is the one that Kyle's gone from, right? Now, if I just go back, this is on the hourly charts, right? So, and you can see the orange trend line down here sort of corresponds with Kyle's chart, and he got into the trade here. Now, just on the face of it, before I even go digging deeper into where this trend line is and sort of verify if that's the one we should be looking at, one thing I would do first of all is have a look at from the high to where Kyle got in, you're looking at around 130, 125 points, right? Over the course of 21 bars, this is an hourly chart, so 21 hours, okay, 125 points. Now, the majors would do maximum daily range, right? And I've probably misinterpreted this going back eons ago around the average daily range. What I was referring to, when the thing kicks off, how far can it go? So the ADR, as I've sort of stated previously, should be the MDR, the maximum daily range that you see on a currency. Now the majors, that's 150 points. The crosses are a little bit different, especially when you get into the exotic crosses, they can go further. Okay, but obviously sterling Swiss, two major currencies, it may not be far off it generally if they are behaving sort of normally. So 125 points coming down to this trend line. Would I be looking for another 100 points to the downside? No, I wouldn't, right? You wouldn't see, unless there's some sort of catastrophic event in the UK or Switzerland or Euro for that matter, you wouldn't see a 250 point move or a 200 point move. Well, it's moved to 125, right? And then you sort of think, well, how far can this thing go? Can it go another 75 points or thereabouts to get you some cash? You're looking at 200 points on the day. It just doesn't happen, right? If I move this line here down to where it went to, right? How far to go on the overall day? 166 points and then bounces, right? So think of the maximum daily range. Once again, it was my sort of mess up because everyone took the average daily range as being, okay, on an average day. Well, what I mean is the maximum daily range on a day when the currencies move from the high to the low, 166 points. I'm not surprised it stopped there, right? Now, don't forget, when I'm analyzing these, it's easy to do in hindsight. But one thing I would be looking at straight away when currencies do come up to breaking significant levels, how far have they gone? How far have they gone so far? Because you've got to have in the back of your mind, even though it's like this is a cross, 150 points is thereabouts. So you see it breaking down here, and even here it's at 137 pips. Now, Kyle was selling, looking for this thing to go down. Okay, once again, this thing's moved 138 pips even before Kyle's got in. He's looking for the retracement to get in, but still, it's not going to go. I don't think there's any room to get another 75 plus points to the downside, right? That's just on the face of it. So that's the first thing that you should be cross-checking when you are looking at getting in. So the whole idea of this is good. Breaking down, comes back, retests, and goes again. So if this situation, when it gets back to the entry point here, if that was instead of 125, like 50 points, I'm like, yeah, well, there's plenty of scope for another 100 points to the downside and the market will run with it. It's almost like it's fatigued and running out of steam, right? So to me, when I'm looking at, I know Kyle was saying looks like it's a bit overbought. It's not really. This is like trading mid-range. This is no serious momentum. What you're looking for when you are looking for overbought is up here, like well above the that 80 threshold and below 20 for when it's oversold. So as this thing's coming down, it is oversold, right? And then it stalls, comes back, blasts through the trade. Now that's the first element of that trade. I wouldn't be sort of getting over enthused with a break trade to the downside. Now, just taking a look at the trend line now, you can see here, it's hit a previous low. And you know, this one here is close enough as well, but you need to sort of go back. Now I've got this on my daily charts. If I just come back across, what I'm trying to do is when you're doing your analysis like this, or any technical analysis for that matter, the thing you got to think of when you're drawing the trend lines is everyone looking at this? If I draw a trend line, look at it and go, you know what, is everyone going to be looking at this trend line? Well, if I just get rid of this horizontal line, because that's a different thing. I'll come in to explain what that is doing. So you got the low, and then almost all we've got is, as the progression of this trend line, right? If I just go back over here where we had the lows here, or even when you got this low, you can see it's starting to move to the beat of the drum. So we've had to wait a fair while to get the second low, and then it's higher. Now you can start to see the currency beating to the drum of this trend line, right? And then as it goes along there, we can see where it's had a bit of a short-term blip to the downside. You'll be adjusting this low to the new low. Once again, it's just rallied to the top. You know, then it starts to form the resistance trend line, starts trading sideways. But where does this trend line really come back into play? Let me just redraw this. Okay, you got the low, we've got the second touch here. Right, now where decisions start to come back in, this is why you've got to be patient and wait for the opportunities to get there. It's when it gets back to the trend line. And you can see how it's gravitating around this trend line. But it's not, this is like the barroom brawl, but with the cross, it can be a little bit bigger, right? This is on the daily chart. So we've got the breakdown, it breaks back up. It's trying to work out what's going on. Finally sort of breaks down, right? So even by the time this thing has already sort of moved above, you could be redrawing the trend line to this point here, right? Because now it's back above the trend line. And then you can start to see how it's, you know, breaks back down here, a bit of a barroom brawl, comes back, retests, finally breaks through, and the process starts again. So what we're doing is, as we're going along with the trend line progression, right? And once again, you get to this point here. It's decision time here. There's a nice barroom brawl. It breaks down again. Indecisive what's going to happen. Up and down. Once again, indecisive. And comes back over here to where we are. And sort of just a bit like it's trading sideways, but drifting lower. Okay. Now, the core point here is, as we go along from using this low to this low to this low to this low, what is happening is we're getting further away from these previous touches. And all we're really trading is, when you have this situation, you're just trading the previous low, right? It doesn't actually, there's only two touches here, and they're so far apart, and there's so much of a gap between all the movements, it actually loses relevance. So if anything, you're better off just looking at the lows for the level to where it breaks, because you're like, well, what are people looking at? Because at the end of the day, it is right. Start drawing your trend lines from the low to the next low. But in this situation, the next low goes to here, right? You can see the discombobulated price action there. I mean, who's really looking at this trend line? The way this thing's behaving, it's not really sort of kicking into gear as fundamentally, and no one. So you're drawing it to this low. Once again, you can see a little blip down. Then what we've got is the last low before the breakdown here. And that's where Cole is looking at it, as far as I can tell. So what you can see here, it's got one and pretty much, you could say two or three, but really two touches there. It's not a significant trend line that the market's putting a lot of risk on. But there are other aspects here. And this is where those horizontal sort of trend lines come in. It's a bit of common sense, because you can start to see where see it's been bottoming out here, here, and here, right? So it's got some sort of formation. Don't forget, we're trying to find out what the rest of the market is doing. So if I just wind this out and I come back to the hourly charts to see where these trend lines come in, right? And then once again, if I widen this out, you can start to see, okay, it looks like to me, this is the trend line that Kyle's looking at. So on the face of it, looks like the right one, right? But the market is shifting, like the further it gets away from the original price action that we've seen, the less significant it is, even though it's a daily trend line. It's the last trend line. But seriously, if anything, you're really just trading this last low, right? So you're better off just looking at the low as the trigger point, not the actual trend line, because the trend line's got less activity than the low. So if I had that there, I'm like, yeah, that's great. What I would be doing is just zooming out, having a look where the price action is. I'd be looking at the lows here and going, well, you know what? There's some lows here that all come in at the same junction point. And I'll be finding the one that's the lowest point, right? If we just change that to yellow. And I'm like, okay, so this, look, don't forget, support and resistance can be anything, can start from anywhere. You've almost got a low point here, another one here. I mean, this is so close in time. I'd say it's the same thing. Another one there close by. So if I get rid of that sloping support line, you've got 3 touches here or thereabouts that on a short-term basis, what we're looking at, and there's that previous low coming back some time ago. It's now sort of been superseded by these other lows. You now, because the trend line is so far, it's only got 2 touches. This is where common sense comes in, and you start looking at horizontal trend lines, because basically, as I was explaining it, if you're using a low starting miles away to the current low, all you're doing is really referring to, okay, what's the low? What's the low here? I'm just trading that low. So you're just trading that, but you can actually get a bit more finite and go, well, okay, well, this thing's close here. It's definitely touched there. It's pretty much touched there. So you're thinking, wow, that's pretty good. And the other thing is these things, if I just widen that out a touch, okay, pretty much comes in around 121, the figure, very close to it, right? So as it even stopped there on this run. So you've got these lows. So the support trend line for me, the entry was just wrong, right? Well, there's a couple of things, right? So as I was saying, so the entry is wrong. So if I looked at the info line here now and say, well, how far has this thing gone from the highs to the lows, even to the break point, right? Where it broke, 150 points on the number, 17 hours. Is this thing going to go much further? No, probably not for the next 24 hours, right? In actual fact, it had enough significant downward move to just sort of bounce back through. So you got into a sucker. It's like a sucker trade, right? As I keep saying, I play a lot of golf. Sometimes they stick the pin right over in the corner of the green near where the water hazard is. And if you're stupid enough to go for it, you know, well, it looks good enough, but if you're not exact, you get in the drink and you lose a couple of shots. But this is like a sucker trade where you're like, yeah, great. I'm seeing moves. I'm seeing like sterling looks like it's breaking down. Dollar Swiss is it's doing its other thing. Don't forget, this is an odd cross. So to me, the entry point here would have been 120.93, right? The where to get down to? It's got down here. Where's my crosshairs? Okay, it's got down to, funny enough, I've got the bloody pen there. Okay, 120.75, right? Now that's an extra, just under 20 points, 17 points. They're going 166, 167 points. The range has already probably been done for the day, unless, as I said, unless there's a major catastrophic event in the UK or Switzerland, this thing has done its range for the day. And the break trade is not the one to be looking for. If anything, right, and this is, I don't want to encourage you to go sort of mad here, but you're like, well, this thing's gone 150 pips, right? If this thing breaks down a bit further, it could ricochet and you've got a false break trade here where you're actually looking to get into the trade and go long, right? Now, that's a stretch because you're doing the right thing. You're looking at sterling and it's under pressure. So Is sterling going to bounce back? Maybe, maybe not. You'd check the range on sterling and see what the range was there as well. So the idea was good, just the execution was at the wrong levels, clearly, because you got stopped out. Otherwise, we wouldn't even be having this discussion. So as I said, it's easier in hindsight, but I would always check an instrument that's come down to this level, see how far it's gone, right? And when you are looking, let me just come back to that daily chart and shrink this up, because if you are looking like doing the right process, going from the low point over here, I'll fix that up in a second. Right, from here to here, or this trend line is all it's isolating is what's that low? That's all you're trading, really, because it doesn't have all these previous lows it hit in play. They're all out of discombobulation. So really, you're just trading this last low, and you're better off going with a horizontal trend line to locate where that is. It's more specific than that sloping trend line in that regard. All right. So as I said, really good idea to go through these trades and knuckle it out, because then you can sort of build on that. Next time you come into a trading situation like this, am I going to go with the break trade? Well, maybe not. Maybe go with check out the range first, and you go, whoa, it doesn't mean like some weird event, this doesn't move another 100 points, but on the law of averages, it will only go a maximum daily range of 150, right? As I said, the crosses can be a bit different. They can actually be a bit looser. And so that's where we are with the sterling. What I would be doing is just coming back. You have a look at sterling itself. Once again, I mean, it's pretty hard. I mean, as I was saying, like looking at sterling Swiss, potentially looking for a bounce and getting into a trade in the top side, it's pretty hard when the sentiment is so aggressively down here on sterling, right? And as I said, it's a good idea to sort of check out what's going on here. Use this info line if you've got Metastock. Use it a lot, because it's a good tool to work out what's going on. Okay, 35 bars. That's come down 273 points. So if you came back and said, okay, give me 24 hours, right? 186 points. Big day, big range over that 24-hour period. Wow. Is it going to go further? Usually not. So what happens is when it has these ranges, right, big dips, you see it trade sideways for a couple of days, right? It's just recouping, right? Think of it that way. And then when the next part of the trend kicks in, it drops down, then it recoups, right? It needs time. The market needs time to digest, take profit, and then go again and go again. So that's what happens. So make sure you're checking the range there as much as you can before you get into these trading situations, because it's a surefire way to work out what strategy you should use, and that can just improve your overall performance. With sterling, if you are looking at sterling and sterling's coming down, the other thing I would be doing is going through all the sterling crosses and finding the best pair to be getting into, right? Like sterling yen is a good one. I mean, this, you can see here, let me just try and get this thing up here. Like even looking at this chart, you can see exactly the technical analysis side of things had a lot more structure to it. Let me just get that red so I can see it. Just as an example, right? So I've got that low there. And now what I'm trying to do is find out where these pressure points are. Okay, this might give you a bit more of an answer. Let's make sure that's on the right spot there. Yep. Okay, so the difference here between this line here, if I just bring that across, I want that in front. Visibility, no, coordinates text. No. I was just trying to get it in front of the cloud. But so let me just have, like, this is different, right? So you've got this trend line here, starting here. It's got two touches, okay? And you can sort of see, well, it's actually created some trading carnage around that trend line as it comes across. That's why we draw multiple trend lines. Now, the second trend line starts from this point. You know, you can see how close it was to this point here. It never really, well, actually, let me just, sorry, come back one step. Okay, so get that point there. So once we get this second low, right, you can start to see from the starting point, 1, 2 touches. Then we have to wait, comes back to the trend line, funnily enough, hits that, bounces off. You can see it working here the whole way up, and then it's finally sort of just drifted through, right? And that led us to the movement of the trend line to this new low here. And from here, the trend line is back in control, up, come back to here. Now it's sort of a significant drop through the cloud. It's just a clean snap through the trend line, sort of comes back, doesn't even retest that much, down to the next carnage level. Once again, see the difference here of a trend line with multiple touches. I mean, I won't even count those, but you got all these ones. Okay, how clean the snap is. And when you get a trend line, it's got 2 touches, like way over here. See how like the price action is so far away. It's like almost the market doesn't believe it's got that much support, but there are orders here and there's price action around this level. You got a massive barroom brawl, and then it snaps down again. Now this is easy. Well, missed the trend line. This one here to identify is easy. This one here is more difficult. Okay, and as you sort of start to see that, and this is what you were sort of looking at on sterling Swiss, right? You could be drawing this low to the new low there after we've had, once again, 1, 2, you're coming up to the 3rd touch there on that, gives this a bit more significance, okay, after that first low. And what does it build up again? It builds up a pressure point where the market's focused on it and it snaps straight through the trend line. So that's what we're looking for from our analysis, right? You're looking for pressure points where there's a buildup of pressure, and then the currency has a chance to really get involved. So hopefully that answers your question. I mean, I've gone through a number of different things there, but the info line is a key one to working out how far is this thing going to go, right? And if there's a significant event, don't worry about how far it's gone so far. It's going to go again. But if there's not, well, then, you know what, you're sort of getting, it's like that sucker trade. Looks great. Everything looks good. Long-term trend line. You go to get short and you're getting short at the lows. Why? Because it's already done the range for that 24-hour period. So I'd be looking for more of a significant trend line. As I said, using a horizontal trend line where it's got multiple touches, that just would have saved you some cash because you're looking for it to break down. Where do you get in? Well, if you're looking for a break trade, exactly the structure you did, but the range here tells me there's a bit too much risk in this because it could drift from here. It's not going to go down. Doesn't mean it also bounces, but it could just trade sideways and you're in a trade for like 20 hours and it's not going anywhere. Okay. Hopefully that makes a bit of sense. All right. Good question, Kyle. Hopefully the rest of you get some action out of that as well. Some knowledge. And these are the sort of questions you should be asking, right? I'm sort of sitting back here watching a lot of accounts, seeing a lot of over trading from some traders. As I said, if you're trading, you know, small lot size and taking 2 or 3 pips out of it and your losses are 20 pips, you're in a death spiral at some stage. You may not know it, but you're going to lose. All right. Anyway, I'll address some other issues from other accounts and give some traders some more feedback. I've got a bit more information to work with now. All right, guys, have a good one. All the best. And actually, sorry, before I finish, if you've got more questions from what I've said or how I've explained things, by all means, post it up there and we'll get to the bottom of it. All right, guys, have a good one. Cheerio.